Alright, hello everyone, and welcome to a video where we're going to be looking at attempting to predict some VCAA questions. This is part 2. If you haven't watched part 1 yet, we did a whole bunch of Unit 4 Areas Day 2 content that wasn't included on last year's exam. Today we're going to go a little bit more into predicting what could be on this year's exam based on the current state of the economy. So we're going to be looking at basically what was happening in the economy in May of this year, and then using that as a jumping off point for some of the questions that they may ask, because they like to have the exam finalized by May. And after that, it gets printed, etc. So anything that happens after May cannot be technically directly within the exam. So we don't really need to talk about the things to consider. We're going to be looking at what was looming large in the economy in May. So what was happening in May in terms of some of our major bits of curriculum? Well, monetary policy has been expansionary in nature for a few years. Therefore, what I predict from that, because it's been expansionary, students kind of predict that that's what they're going to be asked about. They're going to be asked about current monetary policy. But VCAA could be sneaky. They could offer a question where it sets a scene where where a contractionary policy stance might need to be implemented to throw students off, because students start to predict that they're going to need to talk about expansionary monetary policy, and they don't really think about what would be considered contractionary or why they would need to be following contractionary policy. Also, Australia was moving out of a recession and into an expansion for the first time since the pandemic began. So this could mean that there could be a question relevant to automatic stabilizers or the business cycle, basically what was happening at that point. And then finally, the current account has been in surplus for the past few years, despite historically being in a deficit. So many schools still focus on teaching the current account deficit, as that's what's in the textbooks, that's what's listed in the study design. But because we've been in a current account surplus, asking about that and expecting students to talk about why we're in a current account surplus could be very, very relevant. So let's look at 3 questions, 1 for each. So for the RBA one, outline how the RBA could use open market operations if economic growth and inflationary pressures were rising rapidly. So we're going to assume that that means beyond the goals. And this is going to be a 4-mark question. So we're assuming it's unsustainable growth and inflationary pressures that are very, very high, which would mean that aggregate demand is higher than it should be. So basically what you need to do is talk about the fact that the RBA would take on, and this where it could be a little bit tricky. Like, you could do 2 things. The smartest thing to do would be to say a less expansionary stance based on current things. As they'd be increasing the cash rate, but it'd still probably be below 3.5. So any cash rate below 3.5% is technically considered expansionary. So saying they could take on a less expansionary stance would be probably your first mark, and kind of saying why. So plus why. So because economic growth is occurring at potentially an unsustainable rate and inflationary pressures are high, they would take on an expansionary stance to try and constrict aggregate demand. And you need to go through the open market operations for that. So the step-by-step, on the first Tuesday of a month, they'd announce the less expansionary stance with the reasons why. Then they would go about selling government securities at a discounted price. And this would decrease money in the short-term money market. And that would then put upward pressure on the cash rate, which would then flow on to increased interest rates, which would work to lower aggregate demand and therefore ease economic growth, because businesses, if aggregate demand starts to fall, they will stop producing as much. So therefore, it will lead to decreased production and ease demand inflationary pressure. So you need to talk about all those things to get the full 4 marks there. So it's quite a bit in that question. 3 would come from this open market operations, and 1 from that first, why they take on a less expansionary stance and why. You'd probably get most of the marks if you said a contractionary stance, but because we are so low at the moment, 0.1, and would take a less expansionary stance probably just to 0.25 or 0.5 at the moment, you'd need to say less expansionary to be fully correct. And then we've got explain how automatic stabilizers have recently worked to impact the business cycle. For 3 marks, split there, automatic stabilizers, you'd have to talk about what they are and where we are in the business cycle. So describing would be your first. So describe automatic stabilizers. For 1 mark, those are things automatically built into the budget to stabilize economic activity and work in a counter-cyclical way. Then for your other 2 marks, you'd say where we are in the business cycle and how these have changed. So you have to talk about both welfare outlays and tax revenues, how they've changed recently. So you talk about 2 things here. So you talk about the fact that we were in a recession or a big trough, and earlier this year we had positive growth for the first time and started rising. Or you can talk about where we are right now, which is high growth, high inflation, and the fact that we've gone into lockdowns and therefore things should start to slow down. So you could go either if you set those scenes correctly. So you'd have to talk about how, so link to the current world, and how they've worked in either a trough or the peak. As long as you set that scene, you'll be right, because that's still recently thing. So we'll go with the peak because that's real current. Should say you'd follow from that. So like in the current world, like or currently or recently, economic growth has been high, inflation has been high, and unemployment's been low. This means the government's got increased revenues and decreased outlays. And this automatically increases the amount of leakages and decreases the amount of injections into aggregate demand. This automatically starts to decrease aggregate demand and therefore move us towards a business cycle contraction. And that would be your last mark there, in really getting into how that's impacted the business cycle overall. And then one final one, which is going to be about the current account. So a relatively simple one that's going to discriminate between students based on if they know about the current account or not. So explain one factor which may have led to the current position of Australia's current account. So first up, you'd probably want to describe a factor or describe the current account as well. So you'd want to say what the current account is. You'd want to get into your recent factor, which the easiest one is going to be growth in China. And you'd want a recent factor and link it to the sub-accounts of the current account. So link it to the sub-accounts of the current account. So this would lead to an increase in export credits, therefore increase in the balance of goods and services or the balance of trade, which is going to lead to the final point of leading to our current account surplus. So it increases the size of our current account surplus because China is growing so much. So it's relatively simple. So the current account is a record of all financial transactions into and out of Australia within a financial period. One recent factor which has impacted the current position of Australia's current account is the growth in China in recovering from the COVID pandemic. They've had a significant amount for Australia's iron ore exports. This has increased the level of export credits in the current account and therefore increased the balance of trade into a surplus. This has all then come together to increase the overall size of Australia's current account surplus. 3 marks, bang, bang, bang. Not too difficult overall. And that's it for this series of predictions of what could be on the exam based on what's been happening in the economy up until May. We'll probably do one more of these where we start to look at just some things that haven't been asked at all in the study design. And that today is technically GAT day. So if you did the GAT, I hope it went well for you. I hope you are now focused fully on all of your other exams. If you have any questions at all, feel free to email me, Sean@therunningeconomy.com, or check out the blogs at the website, same website, runningeconomy.com. If anything else I can help you with, let me know in the comments below. Have a great day, and I'll see you next time. Bye.